Well, look, I think the market is already uneasy because of this potential second wave, while the rebound in the number of cases. Well, I think this second wave issue could still be contained, but that probably will push back recovery, or I mean, set back the recovery in the coming months in terms of data. So I think market's already a little bit uneasy about that. Thankfully, we had the Fed, bond purchasing, whatnot, come in and restore confidence a bit. But I think, at this point, we're probably still in a cautious state in terms of market sentiment, and so investors should be a bit more defensive.
Right. What is your market strategy right now then, with the Fed coming back into the market?
Yeah, well, so the most direct beneficiaries are obviously in the bond market, right? So the Fed has been purchasing ETFs in bond ETFs, and now they're directly buying credits, and so you would expect credit spreads to continue to narrow, and as more investors kind of the Fed buys out more investors, they will be seeking to find more yields elsewhere, and that includes the high yield space, that includes emerging markets. So in the bond space, we actually think that this is a good time to be positioning for a little bit more, take more a little bit more risk in the bond market. For equities, I think the benefits are less direct, but I think we need to keep in mind that we are still in the beginning of a new cycle, and that's a fairly positive view, right? There may be setbacks from time to time, as we experienced last week, but I think this cycle is going to last a lot longer than just a couple of months. So I think we should keep that in mind while we manage the turbulence in the near term.
You talked about the second wave of virus outbreaks. Is that the next big risk, do you think, for the markets?
Well, I think so, right? So Beijing is seeing this rebounding cases. Together over the past 5-6 days, we had some 137 cases, and that's very concerning compared to single digit daily numbers in the previous month or so. But still, many other parts of the world are seeing tens of thousands of new cases each day, and so I don't think this is immediately out of control. The response to the Beijing outbreak is very fast and pretty severe. The city is back to, schools are closed, back to work from home type of situations. So I think that can be contained. However, canceled flights, service sector issues, I think that will show up in the June data. So I think the market will be anticipating that, and as you see showing on the screen, the equities will probably be see some setback because of it.
Do you think then a V-shaped recovery is unlikely for markets and economies?
Look, I think the V-shaped recovery has it's already proven that it's a V-shape, right? So we had the collapse in February in China, in April for most of the rest of the world, and the May data or the March data in China, and the May data for the rest of the world is a sharp recovery. We saw the payrolls, we saw the retail sales from the U.S. So that is a V-shaped recovery. It will take longer to get back to pre-crisis levels, but I think that process is what generates more risk appetite, right? The recovery part. So I think that we should still keep in mind that we're still in progress for that, and I think the impact, if we get a second wave, the impact on the economies would not be as severe as during the first round.